So starting out with Monday, just remember this level that we took out at the end of last week. Zoom in here, we can see that we took it out and then we made a move back up, breaking this high and taking the day up. What I want to see is there's this fair value gap here. I want to see a move into that. However, this is a pretty wide area. The way I narrow it down is I go down to the hourly chart. We have this single order block here, right? Draw that out, go back out to the daily, and now we have an area that we are looking for. So this was my plan for the week. Wanted to see a move up into this area, and then once we shifted structure to the downside on a larger time frame, I would become bearish again. Going to Monday's 15-minute chart, we look at 8:30 open right in here, and we look back to see where the liquidity is resting. Right here, and right here. Just those swing highs and swing lows. Now, if we are bullish, which we are, we're wanting to see a move up into this order block and daily fair value gap. We are looking for lows to be taken out and then an entry to be presented to take out those highs. Going to a 5-minute chart, you can see it dropped below and then took out stops and then made a move up. One thing to notice here is this 5-minute fair value gap. Then we'll go down to the 1-minute to refine our entry. So looking at the 1-minute, a little bit better picture, right? You can see it came down, made a short-term high, came back down, and then broke that up. So initially, if you were looking for this fair value gap here on the 1-minute, you didn't get entry, could have entered on the 5-minute fair value gap. However, if you missed that, it's not a big deal. Get this move, market structure shift here, and then this 1-minute fair value gap here that you could get a second entry. Now this is a super large fair value gap, so what I like to do is take a 0.5 fib, cut it in half, and then use that as my entry. That just reduces your risk from having a risk all the way up here to right there. So that is what your risk reward would look like, and then if you have runners, you move it that way. Looking at the 1-minute chart, once we reach this daily order block and the hourly or daily fair value gap and hourly order block, this is where I'm looking short. However, how do you know when to look short? Well, you're going to look for a market structure shift. Draw out these swing lows, right? You can use the 5-minute, 1-minute. I like to do the 1-minute just to see the action a little better. And you can see that none of these were taken out. So there's no reason for you to be thinking to go short anywhere in here. Once we get right here, you can see that we get a move down. Displacement after a market structure shift, what are we looking for? Imbalances. Well, we have one right there. Now, why don't I put my stop right on this candle? As you can see, there's another imbalance up here. And as ICT says, take the trade in the first one, but expect it to be able to trade up into the second one. Put my risk above this candle, and that is your trade for that. Now, why do I put my target right here? Like a little bit of a weird spot. Yeah, there's a swing low there, but why is that? Going out to the 5-minute chart, you can see this big fair value gap here that hasn't been filled. So I'm targeting that fair value gap there. Another reason I liked that short is with a broadening formation here, shown on the hourly. We go down to the 1-minute chart, and that is the broadening formation there. Hits the broadening formation, market structure shift, kind of things just aligned. So that is why I liked that. Going back to the 5-minute chart, after we make these relative equal highs here, what are you looking for? Well, when you have relative equal highs, they become a target, right? You don't want perfect highs like a double top. Well, is there an imbalance in this range where we could look to go long? Right there, that 5-minute fair value gap. So looking at that, you can take that long in there and put your stop on the low of this candle, and you would get that risk to reward there. Once you take out these highs up here, you're going to look to go short again, or at least I was, with my bias being bearish once we got into this area. Going into Tuesday, our plan was still intact. We got a move up into our daily fair value gap. Hourly order block was filled. So we want to look for lower prices today, according to my bias. Going to the 15-minute chart, you can see that we gap down on the open of the overnight session. So we are still bearish because of the bias, so we are looking for downside prices. Where are we gonna look? This 15-minute fair value gap. It caught my eye because it's the biggest imbalance in this area here, and it also lines up with the broadening formation. Going to the 8:30 open, when news embargo lifts, we are going to look back and see where liquidity lies. You can see we have this little double top here, high of the overnight session, and then these levels here. So ideally, if we are looking for lower prices, we want to see a false move up, grab liquidity, and go down. We don't get the move up into those highs to grab stops. We make a really clean top here, so that will be a target. We want to take that out before we go much lower. So as price takes out these lower levels of liquidity, we're expecting it to reverse at some point and take out these highs. But where is it going to reverse? We don't really know that. So we look towards our imbalance that we charted out earlier, right here. When price reaches into that zone, we want to be watching price action. Another thing that adds to it is this broadening formation here. They kind of line up for a price to reverse there. Moving into the 1-minute chart, we can get a better idea of what is happening. During this time, though, I noticed a divergence between the S&P and NASDAQ. Right, the NASDAQ was making higher lows, while the S&P was making lower lows. How do you play this? Since NQ is the one diverging up, you can just enter long and risk the lows here, right? Because if the lows are taken out, that divergence is invalidated. So you could enter here, risk about 20 points. Your first target is over 70 points away, which is pretty solid. However, what if you didn't get that entry or you wanted a more confirmed entry? We have this market structure shift here, 2-minute fair value gap, and it gave you all these chances to enter before a move up. As you can see, offered a nearly 250 points for about 20 points of risk here. Even if you didn't play NQ, you could still find an entry off ES, right? So ES sweeps those lows, get into this zone, you get this market structure shift right here, and then a return into this 1-minute fair value gap with your stop on this low. If you missed that entry, it's not too late. Just go to the 5-minute chart and so many entries were presented. Make new highs, retrace back. Make new highs, retrace back. Make new highs. Those were all offered. However, you see how this fair value gap is very large. I like to use a 0.5 fib, put it in there. You might not always get entry, but instead of having a risk that is from like there to there, you cut it nearly in half. So risk to reward for each fair value gap to these initial even or relative equal highs looked something like this. And if you look back out on a 15-minute chart, those 5-minute entries gave you almost nearly every retracement. Here is just a little overview. Made relative equal highs, broke down, broadening formation, fair value gap, move up, move up, move up. If you wanted to look on the 15-minute chart, right, market structure shift right there, fair value gap, enter there. Going into Wednesday, there was a Fed meeting, so we're expecting some volatility in the afternoon. Just showing these to kind of show a little framework that this is what I saw, and then it's just not all hindsight. So looking at the hourly time frame, have these broadening formations, right? These highs from the Monday, and then these highs right here that were pretty relatively equal. So looking at the 15-minute time frame, these are those relatively equal highs, and then that is the level from Monday. Looking still short bias here. That was my plan for the week. we want to see a move up above here and before we drop lower. So we get this move up. Then we want to look into the lower time frames. So we'll look at the 5 minute. Now, we're looking for a market structure shift after this, right? With a displacement and then an imbalance. So let's zoom into the 5 minute. We get this low taken out here. However, there's not really a lot of displacement, right? And then we get this low taken out here with quite a bit of displacement. Imbalance right there, and that could be your entry short. However, if you wanted to refine your risk a little bit, you could use the 0.5 fib or the start of this body of this order block here to go short. If you look, we have a 5 minute fair value gap here that was only partially filled, so we can target that area right there. This is the region right before the Fed meeting. I don't like to trade this because it's just choppy. We do still have those equal highs up here now, just because we failed to break up above that in the morning. They're pretty close, as you can see, like $3 away, so pretty relatively equal. That will be a target for the afternoon, but we still need to fill this 5 minute imbalance. So let's look at the 1 minute chart. As you can see here, some relatively equal lows, right? There's liquidity under there. So if we're looking to take out these highs right here, we want to see us grab this liquidity and then move up. So zooming in on this, you could just take it right here, but if you wanted a more confirmed entry, get a market structure shift here, move up. There is this fair value gap here that you could put your stop there, but I kind of like this single order block with the fair value gap. So enter right there, stop low here, and then you're going to be targeting those highs there. If you missed that entry and still thought it was going to be going to 4,000 here, you could enter later right in here, market structure shift at these relatively equal highs. However, personally, the risk reward just isn't there as much for me, so I would have laid off that. Once we break above these equal highs, we get displacement. We're looking for a reversal, right? I'm still short bias on the week. Looking in here, so we'll zoom into the 1 minute. Now we're looking for a market structure shift, right? It's kind of some BS price action in here, right? Kind of displaced here, not really what I'm looking for. I kind of like to take this low to really show that we're going to be changing character. Draw that out. Well, we take that, but not really, right? There's no displacement. Kind of just form these relative equal lows, come back up. Here we get this displacement. There's an order block here that you could go short. And the reason you wouldn't take this fair value gap here is when you're going short, you want to be selling above this 0.5, right, of the swing. And then when you're going long, you want to be buying right there. So there's your risk to reward. Going into Thursday, my bias was actually wrong. I was still a little bit short bias. However, what I didn't notice is we were making higher lows after that Fed meeting. Should have seen that change in the state of delivery. Also, if you look at NQ daily chart, you can see that it's lagging behind. Just kind of ways that I could have corrected myself on that. But if we look at this, we have a nice little broadening formation here. Fair value gap right there. So that would be my point of interest on to that day, or on Thursday. Going into the 15-minute chart, look at 8:30, see where the liquidity is. Right there, right there, right there, and right there. Ideally, being bullish, you would want to see a move down here, and then a move up there. And even if you were bearish, right, you never get this market structure shift, as I'll show. Looking at NQ in compared to ES, ES doesn't get that liquidity taken, but NQ does, right? 15-minute fair value gap there. So that is where you would want to be looking. You look at the 1 minute chart, you know, you could enter there. I like a little bit more confirmation, but you could just risk about 10 points or so. Other than that, like there's a few times that you could get long there, right? You get these swings with the retracement, market structure shifts, you could get long in there. Friday, kind of similar to Thursday, had the bullish mindset today, fix that, with the goal of taking out the liquidity here. Had an order block right here, this high right there, this little gap, and then these 4150 level, which is basically this cluster of highs in there. Going into the 15-minute time frame, if we look before 8:30, we made a slight move up to take out those highs, right? But if we're bullish, we want to see a move down. Looking right here, we get this move down. That is where the liquidity would be to make a run higher. Looking at the 1-minute chart, this is where it ran the stops. Ideally, you get this little relative equal high here, right? You would ideally want to see displacement up here and then a retracement into here. But we don't really get that, so you're waiting on that. Get the displacement here, retracement. And since this is right at 8:30 when the news embargo lifts, you want to risk those lows. And then your first target would be there. Second target, that 4100 area that we're looking to take liquidity from. Besides that entry, there wasn't a whole lot that I liked. As you can see, if you're going to want to get into a trend, you want to enter when it comes back down into a discount. However, never really does that on these swings. However, right here, it does slightly. That would have been about the only entry I would have liked. And it is also the 15-minute fair value gap there. I hope that this helped you out. If you do enjoy this, please leave a comment below. I spend quite a bit of time on it. So going into the next week, just kind of anticipate. Where is the liquidity resting? Are there any imbalances? Where are we likely to go? Thank you.